One of the key benefits of selling options is that we can make use of volatility contractions in order to generate returns on our trades. In this video, I'm going to elaborate on what this means. And also we're going to talk about how can we identify options to sell so that we can enjoy the benefit of volatility contraction. To set the scene, markets do not like uncertainty. So generally, fear and volatility in the markets tend to be low most of the time. What we're looking at is the chart of the VIX, also known as the VIX. And this is like a fear index of the US stock markets. And what's the first obvious thing that we notice? The majority of the time, the fear index is actually at the bottom of the chart. Sometimes there are spikes in the volatility charts caused by events such as, this was the 2008 Lehman Brothers global financial crisis. This was 2016, where there was events like Brexit and the very unexpected presidential election in the US. And this was caused by COVID-19. And when it does spike up like this, we normally can easily predict that it's very likely going to come back down to a level of fear and volatility that the market is more comfortable dealing with. Well, it's kind of like this. Some of us really love to watch horror movies, right? I don't. It's that feeling of thrill and suspense that people find really, really enjoyable. But as much as we may enjoy it, I'm sure the majority of us don't want to constantly be living in that state of emotional high. It's the same thing in the markets. Market participants don't want to have a heart attack every single day. They don't want to have a heart attack at all if possible. Hence, the market volatility tends to be low most of the time. We have established that volatility is a component in option prices. When volatility increases, so do option prices. And when volatility decreases, option prices tend to fall as well. Knowing this, we want to sell options when the volatility is high, because we know from market psychology and market behavior that the volatility is very likely to come back down, and we stand a pretty good chance of making a decent return on our trades. So we want to look for opportunities to sell options when volatility is high. Let's talk about two ways to identify such opportunities. The first method is to make use of the earnings announcements. Now, we've mentioned that volatility increases when there is market uncertainty, and there is plenty of uncertainty around earnings announcements. This is a very recent example. We can see the share price of this stock fell by 15% after its earnings announcement. The thing about earnings is that nobody can accurately predict what the prices are going to do, how the prices are going to react to the earnings announcement. Logically, we may think that, hey, good earnings should translate to upward movement in prices. Bad earnings should translate to downward movement in prices. Logically, we might think that way, but in reality, the market can be extremely irrational. We can see downward movements on good earnings announcements and upward movements on bad earnings announcements. Now, before the earnings announcements, we cannot predict how the share prices are going to react. But what we do know is that after the earnings announcements, there's going to be less uncertainty, and therefore the volatility will come down, and option prices are most likely going to come down as well. So before the earnings announcements, we will sell out of the money options, which are really expensive due to the high volatility. Now the goal is this: if after the earnings announcements, our option contracts remain out of the money, the value of these options is going to fall significantly, and we can exit our position the next day with a decent profit. So when do these earnings events take place? Now generally they happen 4 times in a year, usually January, April, July, and October. I use this website called StockTwits. It's free. You can just come over here and click on the earnings calendar, and it will tell you which stocks have earnings on which days. How exactly do I trade earnings? Well, this is a topic for another video. I'll cover my strategy for trading earnings, how I make a decent 20 to 50% return on my capital on each trade. You don't want to miss out on that, so make sure you are subscribed. The second way we can identify options with high volatility is using a metric known as the IV percentile, or sometimes also known as the IV rank. So this is how it works. It takes the volatility of the stock over the last 52 weeks and plots it on a scale. The lowest volatility over the last 52 weeks is given a score of 0, and the highest volatility over the last 52 weeks is given a score of 100. So the IVR number that we see, it is telling us the stock's volatility today, where does it rank on this particular scale. If the IVR is close to 0, then we can say that today's the stock volatility is relatively low. If the IVR is close to 100, and sometimes it can even be above 100, then what we can say is that the volatility of the stock today is relatively high. When IVR is low, it's very difficult to predict when it might increase. But when IVR is high, we have a good chance that it will come down to a lower level because the markets do not like uncertainty. So if we're looking to sell options and we want to benefit from volatility contraction, we might want to avoid the stocks with low IVR. Personally, when I want to sell options, normally I will look for a stock with an IVR that's above 40. So in Tastyworks, this metric is known as the IV rank. So we can see that up here in the top of the screen for this particular stock. This is the Spider ETF. The IVR right now is 5. So that is relatively low compared to the 552-week volatility of the SPY. So how do we find stocks with high IVR? So we come over to the left side of the platform. Under watch list, there are some presets that have already been prepared for you. So under Tasty, there is actually a list called the Tasty IVR, which actually shows, I guess, the stocks right now that is offered on the Tastyworks platform that have the highest IV rank. But normally I tend to do it a different way. So I will look for the watch list that is called high options volume, which is under liquidity, because personally I prefer to trade stocks that have much higher trading volume and much higher liquidity. It's a lot easier to get in and to get out of the trades if I wanted to. So I would choose the list of high options volume, and then I would sort them by IVR. So if you can't see this column, what you can do is you can click on this gear icon over here, and under left sidebar, make sure that you have IV rank, and then you can sort of like sort them by IV rank. And this gives you a list of, highly traded, more liquid stocks with a high IV ranking. Well, not every broker has this feature. So if yours doesn't have this feature, not to worry. There are free websites that you can use to screen for stocks with high IVR as well. Personally, because I have access to Tastyworks, I don't use any of these websites, so I can't really speak into how reliable they are. But yeah, just note that there are plenty of resources and tools out there that you can utilize for free. Alright, so we use these screeners. It gives us the list of stocks with high IVR or high IV percentile. What next? What positions do we take? What kind of strategies do we employ? Next thing I do is I go to the chart. I apply some of these technical analysis tools and tips that we've talked about. Maybe I see if there's a trend, or maybe I see if there are, strong support and resistance lines. And then from there, I can decide which direction do I want to trade? Which option strategies do I want to use? We will definitely be talking more about this as we go along. But for now, that's it for today's video. Do like, comment, subscribe if you found it to be helpful, and I will see you in the next video.